Hi, good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. A few things to actually feature this morning. There are a couple of results that were announced overnight in Singapore, and it's a whole mixed bag of numbers. Let's just start with Genting. Genting announced overnight that they saw a significant drop in net profits. Top line, they also saw a significant haircut by as much as around 25% or so from a revenue point of view. Now, within those numbers itself, it clearly highlights one, top line growth, meaning revenues from their traditional visitors to their gamblers or their gaming tables have actually slowed down. A large contribution for that is the overall gloom where the Asian economy is concerned, where Genting derives quite a bit of their business in terms of traffic. Now, within those numbers itself also, Genting highlighted a significant drop in net profits purely because they took a huge charge of around $95 million or so for loss in derivative trading. And this is due to their forex hedging on some of their forex positions. But nonetheless, this is something which Genting had warned earlier, about a week and a half ago. Let's pull up the charts today. The stock actually seems is up, trading up about 1.5 cent or so. And we are seeing that sort of a rebound come off a low after the stock has been almost hammered down about 10 to 12% or so over the last week and a half. And this big drop down here is a result of the warning that they had with regards to this derivative loss. Now, within the results itself, they also highlighted several good things. One, they have over the last course of the last quarter or so managed to tighten up their credit collection efforts, trying to recover bad debts. Bad debts provisioning has also come down in these statements, which clearly sets the market for a little bit of a rebound, and this rebound could be because that selling has been actually overdone. Now, if we were just to draw some casual lines down here, for example, you're seeing that again, this range equals to this range, which means that from a technical point of view, we are seeing support at this 78 to 80 cents sort of range. Now, whether this stock has the ability to actually rebound back and perhaps cover this gap down here before testing this next key resistance, remains to be seen. But a lot of the sellers or major selling had already been done, and the results going forward clearly highlights that that there are corrective measures being made or being taken. Now, other results includes ComfortDelGro. ComfortDelGro has actually reported very strong numbers. Top line grew by about 2%, but bottom line saw an improvement of around 6.9 or 7%. Clearly highlight that the management continues to actually execute really well in squeezing as much as they can despite the poor economic environment that we are seeing out there. A key contribution of that is obviously the lower price of fuel or lower price of fuel costs or expenses which the company faced with. But looking at this chart also, we are seeing a sustainable, nice long uptrend more or less still intact. This bounce down here is actually quite important, and what we like to see to confirm this uptrend as an uptrend that will continue is momentum that will carry through the next 2-3 days or so. The first test would most clearly be around this sort of levels, around the 324 or so level, which has been a resistance for 1-2 occasions for very part of this year. Finally, one of our favorite stocks that we like to talk about, Noble. Again, perhaps in the news because there are certain reports out in Bloomberg, for example, which suggest that, and this is alluding to a comment made by key management early this year, or rather early this week, in a Monday press briefing, that suggests that they have seen certain quarters of their client or their creditors or their stakeholders or their business partners, if you may, pull back or tighten up some of their lines. This is actually something that we flagged as early on in as in March as one of the key business risks for Noble, i.e. not a collapsing stock price like we've seen down here, as much as the danger of their business partners, their buyers, their suppliers, their bankers, their creditors, perhaps being a bit more concerned than they have been with regards to noble and noble state of accounts, and wanting to actually tighten up the credit lines to them. If this were to happen in significant proportions, what we most likely will see is a potential knock-on effect or a chain effect on some of the other creditors who will ultimately be doing a similar pullback. If that happens, Noble will be forced to actually take unintended actions in trying to unwind some of the positions that they may not already do so. So these sort of things have happened before in some of the big hallmarks corporate actions that we've seen across the world, across different industries. It remains to be seen what will play out down here. Now, from a chart point of view, this doji down here seems to be a potential breakout or key doji to actually move from. Any breakdown below will probably set things racing down to around this low down here, as I will indicate, around the 43 and a half low again. Conversely, because this stock is in such a hugely short position, as reported in some of the metrics out down there, i.e. as much as almost 17 to 18% of the stock remains in a short position. Any bounce up above this doji could also cause a significant degree of short squeeze. So this stock is certainly still in its play, and it remains to be seen what who the winners will be, the shorters or the people defending the stock. Besides that, the rest of the markets are really quite quiet, and this is a good thing because we've had such a wild week in terms of what we saw happening starting from the Chinese devaluation of the yuan down here. We are seeing a little bit more of a stabilization again down there, although having said that, seeing this move, we are not seeing a corresponding move on some of the other Asia regional currencies like the dollar Sing, for example, who continues to deteriorate from yesterday's rebound that we see down here. Key this afternoon is going to be some of the numbers that will be released from the European region, GDP numbers. First reads for some of them, including France, Germany, and obviously the EU numbers will be further highlighted, and then it will probably give data points for traders to trade off. Anyway, thank you very much. Bye bye.